Welcome, viewers. On behalf of Iravati Research and Communication Center, or IRCC, this is your host, Pratim Ranjan Ghosh. I have with me Mr. Shubhendu Moitra, whom we have seen a number of times in this podcast. Mr. Moitra is an investment banker and independent advisor with 33 years of experience. He is also the founder director of Quest Advisors. We will discuss the importance of inclusion of Indian government bonds in JP Morgan's bond index. Mr. Mitra, JP Morgan will include Indian government bonds in its widely tracked emerging market debt index. It is anticipated that Indian bonds will be included in some more global indexes like the Bloomberg Global Aggregate Index, etc. Will you please explain what is bond indexation and why it is significant? Why should indexation help Indian economy? Over to you.
Yeah, thanks, Mr. Bosch. Uh, Actually, I would say the watershed moment for the country, because the inclusion of the bond index, international bond index, Indian government bonds, it's a very important milestone. How much money is coming? That's one part of it. That main thing is that the overall integration of the Indian market into the international market. That's a very important part of it, because as this indexation happens, there are basically three major indexes, bond indexes in the world. One, of course, is JP Morgan, and there's a FTSE, London Exchange, and of course the Bloomberg, which you have named. Now, out of these three, of course, JP Morgan is the first one getting included. Other two will have some issues. We'll discuss that later. What are the issues which is there, which we need to correct ourselves before inclusion into that. But having said that, these particular development will actually usher in the international fund into the government bond index, which will supposed to stabilize our government investment and reduce the cost of the government borrowing, and stabilize rupee to some extent. And also, one more thing happens, that as a new source comes for the government in government bonds, there is our domestic certain funds get released for the other bonds of the private. So that there is a that has a cascading effect on that. And in the same way, overall capital
So it
market, there is
means what you are meaning is that as the foreign funds are coming in, foreigners are subscribing to Indian government bonds. So that means
yes,
that the domestic savings, which was earlier sucked into government bonds, is getting released.
yes,
So that money
absolutely,
can now, to put it in much more simpler terms, or
yes.
effectively, it is increasing the liquidity in the market.
The liquidity in the market is like demand supply issue. Basically, so far, government borrowing was so high in that period. If you might have seen in certain period, the government was borrowing was high. Other private, borrowers used to be cautious in borrowing, because they knew that overall liquidity will be less that time. So those kind of issues will be, of course, sorted to some extent. And of course, it is up to 10% weightage. That's what they have allowed right now in that index. So which may bring in about $30 billion. It will start from next June, 28th June 2024, in for 10 months, 1% each every
28
month.
June 2024.
24, yeah, that's the starting point. They have given a 10 months period to slowly integrate it, because you cannot have an overall bunch just one particular moment. So 1% every month. So for up to 31st March 2025, this 10% expected to be completed. So that is how the integration will happen. Let me also tell you that it's not happened
I have
suddenly.
a
JP
small
Morgan
question
actually.
here. I have a
Yeah.
small question here. Why the bonds were not integrated so far? Why didn't they consider it important?
Yeah, actually, see, the overall India is a very protected economy. Even now, if you tell us that we don't have the capital account convertibility, it's not that it's protected just to protect ourselves. There was a very conscious effort of opening also earlier with the convertibility. But then this,
So will you,
Asian crisis happened, and India became cautious. There was a target taken, which was then decided that, well, slowly we will do it in a different way. So that is one. Secondly, there was not much interest in India. It was supposed to be, it was found to be a risky country. The high fiscal deficits, those issues were there, which is so more or less have been sorted out. The market had stabilized. If you look at the rate of the government bond 10-year GSEC, the more or less the prices have stabilized. Though overall the volatility in the international market was there, Indian market more or less has been very, very stable way it's working. So they found, they see, they were observing it for last 2 years. They have not done it suddenly. 21 onward they started watching, put Indian market in under watch, and it took 2 years for them to decide and finalize that now they want to enter Indian market. And also one more reason also you have to see, there was a requirement from their side also. Russian that bond, because of this particular problem, that there's a vacancy for that. So the Russian bond is out of that. It takes, I mean, number one. Number two, China also, there are some issues. So they are the other two major emerging market in the list. So they decided that India is a very major one, and they should right now include it, so that there's a requirement also from their side, and they found India is much more stable also.
So what you mean is that the Western investors who had been investing in Russia, so post the Ukraine conflict, that market is closed, that option is closed, and also they are cautious about investing in China, probably. So together there is.
I'm saying there's a depth, it will become a shallow. See, you suddenly take out a Russian bond from that particular index. So the shallowness happens. So they need more and more product for diversify it. So India was a very right product for them. I mean, to include in that right out the market for them, to include in the index, to
Yeah,
keep
because you
the
also said that they had been put it on watch list since 2021.
absolutely.
So when there was no Ukraine conflict, right? So it's
Yes,
not
yes.
that it's just because of the Ukraine conflict, but probably the
Yeah.
Ukraine conflict has aggravated the cause.
Might be, because that may be one of the reasons I can think it, because they also need new markets, those investors, new market. Though I was just reading somebody else, so they believe that Indian market still the investors will not come in a flurry and all. But whatever. Having said that, it's a government bond market is even if you have 10% of 20-30 billion dollar international investment, that also has an effect, that integration and the in the story of India, the Indian story becomes much more acceptable. And
Right.
overall, internationally, everybody starts looking at the Indian market in a much positive way. And there is an understanding of Indian market and understanding of Indian risk, which was earlier missing maybe from those group of investors.
Right, right. I mean, just that you hear something happening in some part of the country or some people are shouting, that doesn't mean that we are collapsing.
Yes.
So that's it. You were also saying that the government or the Reserve Bank were cautious in the past post Asian financial conflict. Does it mean that there was persuasion from Indian side to include the bond in the global index? And this is one question. Second question is, does this inclusion require any adjustment in monetary policy management by RBI?
See, it's like this. See, the government always would like outside investors to invest in the country more in more ways, especially in the current scenario. But of course, we are cautious that so that our currency does not get adversely affected when there's a overall international any upheaval which happened earlier. So we wanted to protect ourselves. Right now, we have a very healthy forex reserve, and which is a stable way also. It's not only healthy; it's very stable. It was 600, came down to 583, again went up to 600. So that they're in a much better way. Currency is more or less stable. Currency is not moving fast. So there is another view is that currency will get stronger. I have a belief that RBI may not like the currency to suddenly get stronger, because that will make our product not that
That is not in the benefit
attractive.
of Indian
Not in the benefit,
not in the
exactly.
benefit of
That,
Indian exporters.
that's a very different way of looking into the thing. But actually, nobody would like that currency to be suddenly become stronger, because we have a good export market to cater to. So having said that, the question which you asked is that whether RBI need to do adjustment. I gave you a point that why India others were not entering India is there is some still angles of the how we tax FPIs. So that's why I said that other two indexes, that is FTSE and Bloomberg, they may look this particular angle, and that's what. Though I don't believe immediately that will come. We have to correct that taxation angle of the FPIs so that it becomes much more acceptable to the international lenders.
For the benefit of wider audience, if you kindly elaborate a little, just add,
It's
what do you mean by
basically
taxation?
whenever anybody invest in any
What is
country,
the
that
taxation rate, and how does it fare,
taxation.
say, compared to China
Yeah,
and other markets?
yeah. So I mean, not going much deeper into that. There are issues of the taxation. There are issues of higher taxes, double taxes with various countries. Like for example, you might have seen that the INVITs. I'm just a bit diverting,
Right,
to give an example.
investment class.
Initially, they were taxed in a different way, but last year they changed the taxation. So, as soon as it changed, the InvITs become a bit of unattractive. Then they corrected certain things. So I think our bond, the way the FPI, the international investors are taxed at this moment in the Indian market for the investment, are not conducive overall like international, the other countries, the way they tax it. It's much more fair. You should be able to, pay taxes only to the extent it is reasonable. Anything beyond that, where it doesn't cover the double taxation, then certain investors will be. I mean, we have to go each and every country wise. Let's not go into that. But I'm saying that we have to integrate our tax system of the FPIs with the international market. I think that we have to be looking into it, so that actually the money starts coming in a big way. Because once we get included in the other indexes, those markets also gets open to us. So this is what I mean in a briefly, maybe in a details we can discuss in some tax angle exactly what we can do and all. But basically what I'm saying, that why it has so far not happened, and why only JP Morgan, why not others? Others are much more stricter on that. For them to include any market into the index, you need to have those integrated, those particular laws also to be integrated like other countries. And also there are issues on that. And we need to be very stable taxation. Our laws have to be very stable in those particular angles. So those are the issues I think we need to correct for international market to invest in our country.
To put it in a nutshell, what has happened is one-way integration. It is integrated because we have ensured a stability in areas of concern like fiscal deficit and policy consistency, etc.,
Yes.
etc. So definitely we have done that. Our performance, overall economic performance, might have helped. But what you are saying is that far more alignment is required in attracting that bond, and overall also from the Reserve Bank or the central bank side, they might also be watchful because we were a very insular economy. So I remember when you said about Asian financial crisis, the original agenda of making rupee fully convertible started sometime in late 90s, and the Asian financial crisis, I mean, right after the liberalization, and the Asian financial crisis simply took the steam away from it. And since then, we
Exactly.
don't have a convertible rupee. So obviously, probably the monetary policy makers would also like to see that, I mean, they have to
Yes.
align, but to what extent?